Welcome to our weekly Forex forecast, and this is for trading or preparation for trading for the week of July 6th to the 10th, 2020. Just a quick disclaimer here before we dive into this. This is for educational purposes only. And also, trading is a risky business, so please do be careful with your trading, especially in the volatile markets like we are seeing right now. Things can become quite volatile, and that can be risky. All right, so as usual, we'll start off by taking a look at our Forex Factory calendar here. So not much today, but looking at Monday here, we do have investor confidence numbers as well as PMI numbers here for pound and Eurozone here. Now, the numbers that have been coming out have been positive, and as a result of that, we have seen stock market take off and go higher. So all these economies opening up, or everywhere around the world, we are opening up, and that has been positive. It has led to positive numbers because the expectations are positive. So as a result of that, stock market has taken up. Now there are some negatives going on right now. So for example, the virus numbers are increasing right now, and market is ignoring that. So we have seen the coronavirus numbers go up in the US. We have seen an increase in Brazil, India. Melbourne is seeing a second wave now, and they're actually locking down once again. Also in the US, some of the states that were, or things that were scheduled to open, they are basically taking a step back from that. So things may not open as everybody had expected. So there are all these concerns in the background that at this point market is ignoring, and the focus has mainly been on positive expectations, so optimism around opening up of the economy, as well as the positive data that's coming out. So if we see a change in that, we could see market turnaround. But for now, we are back in risk on mode, and everything is optimistic. So just keep that in mind. Look for that change. If something shifts in terms of the concerns, we could see market change quite rapidly. So that would be the only thing to keep in mind. ISM non-manufacturing PMI numbers out of the US here, they are expected to be much better than the previous number. And if the numbers come in even higher, which we have seen that the actual numbers are beating the projections lately. So if they come in even higher, that will be positive for the stock market, and we're likely to see the stock market go up. And as a result of that, we will see dollar crosses go up as well. So the US dollar is likely to weaken when that happens. And then we have Bank of Canada Business Outlook Survey. So we'll see how that will be. Now, Canadian dollar did take a hit, partly because of oil, because oil has dropped considerably. So if the Business Outlook Survey here is better, or the outlook is better for the economy, in that case, we could see Canadian dollar go up. And then we have RBA rate statement at this point, not seeing any kind of change in the interest rates. And the main focus will really be on what the Reserve Bank of Australia thinks about the economic recovery. So if they express concerns, and if they are overly concerned, that will be negative for Australian dollar, but more likely than not, they're going to maintain their position and adopt the wait and see outlook. And as a result of that, I would not expect too much to change. So only thing that could really make a difference is, one, if we see that they announce more packages. I don't think that will be the case, but should they do that, we may see Australian dollar drop as a result of that. So anytime there is stimulus package announced, it's negative for the currency because it increases the supply of the currency and hence devalues it. So only if we see any sort of an increase in that, they have basically said no negative rates, so that should not be a concern. But if they say that the recovery is likely to be faster than they had previously thought, that would be positive for Australian dollar. So keep an eye on that. And then on Tuesday, not tons. Here we do have FOMC members speaking, but then we have heard from Powell, so at this point should not make much of a difference. Then we have some numbers from Japan, and these, if they don't meet expectations, we're likely to see a negative impact on Japanese yen as a result of this. And on Wednesday, fairly light again, business confidence numbers for New Zealand. They should be better than this, and hence if we actually see that they go into the positive territory, that would be good for New Zealand dollar, and we are likely to see that New Zealand dollar go up as a result. On Thursday here, Eurogroup meetings. At this point, they have, so EU has a package of 750 billion euros for the stimulus package. However, they still haven't come to an agreement on the package or how it's all going to work. So that's a bit of a problem. If we see that the European leaders are not able to agree to the package or the terms, then that could have a negative impact on the euro. Now, if we hear about an agreement being reached, that will be positive for the euro. So we do need to keep an eye out for what kind of comments come out of this. Anything, any sort of fighting, negative comments about the package or not being able to reach an agreement, all of that could cause the euro to drop. So do watch out for that. Unemployment claims here, last time last week, we saw non-farm payroll numbers that were fair bit higher than what was expected. So as a result of that, we have seen the stock market go up. If the unemployment numbers are a little higher than previous, I don't think the market will really worry about it. If they are, let's say the unemployment numbers are declining, so the number of claims they are making is declining, that will be positive for the stock market. So right now we are seeing any sort of positive numbers are pushing the stock market higher, and the negative news or the negative data is being ignored by the market right now. So that trend is likely to continue. And then on Friday here, we have employment data out of Canada. So as we can see here, employment numbers are supposed to increase because people are going back to work now, businesses are opening up. So as a result of that, we are supposed to see a bigger number. Now, if the number is higher than this, the actual number, that will be positive for Canadian dollar. So watch out for that. And that is it for the coming week. So let's go on to our charts here. We'll start off with euro dollar as usual. As we can see, price has just been trading in a range here. Hasn't really been able to do much for the last 4 weeks. We have been stuck here. So this week's candle close is neutral here. So we have large pen on the top, small candle body, but there is some bullishness here because we do have some green here. So this week, my bias is neutral here. We may see more of a range bound move. So we'll have to see. So we may get something like this. So that's what I'm expecting right now. Now, if let's say by chance we get a drop here, and in this case, so let's say if it does drop, let's say they are not able to reach an agreement on the stimulus package there. If it drops, then there is room to the downside. I wouldn't expect all of this to happen all at once, but at least it opens up this move here. So just like we had the move up there and then it got filled, it does open up this inefficient moves, kind of similar to what we had here. There was this big move to the upside, then it got stuck here for a long period of time before it dropped. So that could happen over the next several weeks. But if it does not break, then as long as it holds within this range, I'm expecting further range bound move here in that case. So right now, bias is neutral for euro dollar. I will leave both of these here because should it break down, then we'll start looking for the lower levels. But for now, I'm just looking for a range bound move. Pound dollar here, this one does look bullish. We see that price tried to drop here and then it has turned around. So this week's candle close is bullish and it is into resistance though. So that's something we'll have to be mindful of. It's right into the resistance at the moment. So if it's not able to break through this resistance level, we could, we could still see price turn around and come back and be range bound here as well. So that will be the caution, but based on the bullish candle close here, bias is bullish, but we have to see close above the resistance for the next levels here. So bullish bias here, next level 1.2650, and then should it go beyond that, we're looking at 1.2730. So bias here is bullish, but it is but with caution though. So if it doesn't go through the resistance, watch out for a turnaround. Aussie dollar here, this one as well is trading in a range at the moment. We see price has been stuck again in this range for the last several weeks here. Now we do have a bullish candle close, so a bias here is neutral to bullish. Next target is 0.6980, which puts us into this support resistance level, and then 0.7060. So bullish bias here, or neutral to bullish bias here for Aussie dollar. New Zealand dollar here, this one is also looking bullish. We see that price was into the support level here and has turned around. So right now it's holding on to that bullishness here. And if it continues here, if it is not able to break the support, which it has moved away from, so if it holds here and is able to break through this resistance, basically we're looking for a move higher in that case. So bias here is bullish with caution though. Like I said, if it doesn't break, then we're likely to see a turnaround. But in this case, first target here as things stand now, 0.6580 and then 0.6660. So bullish bias here for New Zealand dollar. Dollar CAD here, this one did turn around. We were right into this resistance here. And as we can see here, things turned around fairly rapidly. So we have a bearish engulfing candle here. So looking for price to drop further. Now, again, just keep in mind, this is the same range that it's been trading in for the last several weeks. So it hasn't really come out of that range. So right now I'm looking for price to drop into the bottom of the range here. So this is where we are. First target 1.3480, and then below that we're looking at 1.3380. So bias here is bearish for dollar CAD. Euro pound here, a big turnaround for euro pound. It did go up last week, but then things have turned around since then. Because it did run into resistance there. So now we have a big bearish candle close here. So bias is bearish. We are coming into support, so watch out for them. First target is 0.8980, which is right there. And then below that, we're looking at 0.8935 level back into the support level here. So bias here is bearish. Now do watch out for a bit of a pullback. We could get that, and then looking for that move to the downside. So bias here is bearish for euro pound. Euro Swiss franc here, this one made a bit of a move to the downside here. We see that price is starting to compress here. It's not moving as it was back here, so it doesn't have the same amount of momentum. So we have to be careful here. So bias is still bearish, but because price is into this important support level here, if it doesn't break through, it's likely to turn around. So do watch out for that. So for now, bias is bearish. Only once it breaks the support level, then basically I'm looking for a further move to the downside. But like I said, the caution is if it doesn't break here, we're looking for a turnaround. So for now, bearish bias, next target is 1.0570, and then below that we're looking at 1.0500. So bearish bias here. Pound Swiss franc here, this one has turned around. We see price dropped, and then it does have a bullish candle close for the week. Now it's stuck in this range for the last 3 weeks. It hasn't really gone too far. So bias here is bullish, but again with caution, because price is right into the resistance at the moment. So this is where we see that price has struggled previously, and now we are heading back towards it. So for now, bullish bias 1.1850 is the first target, and then 1.1920 is the second target here for pound Swiss franc. Dollar Swiss franc here, this one, we do have a bearish candle close here, but again, this one has also been stuck in this range for a while, so watch out. Bias is bearish. I will look for a bit of a pullback, potentially into this area here, 0.9465 area, and then looking for another drop from there. So something like this, basically. First target is the bottom of this previous week's pin, 0.9420. And then should it continue lower, only then. So it has to break through that support before we see a drop here. 0.9380 is the next target. So bearish bias here for dollar Swiss franc. Pound yen here, this one has turned around. We see that price has gone through the previous resistance level. And we did see a big move up in the stock market on Friday, or Thursday, I should say, after the numbers were released. The job numbers came in better than expected. So overall, there is that positive positive mood in the market. So the sentiment is risk on. So it's positive sentiment. And when that happens, we generally see dollar crosses go up and we see yen crosses go up. So this one is looking bullish at the moment. But if we see that price fails to break the resistance level right into here, then it can become range bound and we may see price drop here. So something like this. Watch out for that, but bias is bullish once we see a break of this resistance here. Next target here to the upside is 136.35. Actually, prior to that, we also have 135.70, then 136.35. So bias here is bullish for pound yen. Euro yen here, this one is also looking bullish. We see that price did go up. Now, it doesn't have the same level of momentum, but it is nonetheless, it is bullish. So next target here is 122. And then above that, we're looking at 122.65 or 123. So bullish bias here for Euro yen. All the Euro crosses, though, will be impacted by the Euro group meetings. So we do need to keep that in mind. Dollar yen here, this one has basically gone in both directions here. We did see it go up into resistance level here. So we were looking for a bullish move. It went up, but then there's a large pin on the top here as well. So this one is more neutral, because we may see a move like that. It has really not really done much in the last 4 weeks. So right now I'm just looking for it to come back down towards the bottom of this little range that it's been trading in. So first target here is 106.50, and then it may just turn and go back into the range here. So that's type of behavior I'm looking for here for dollar yen. So neutral to slightly bullish here. Only if it drops through 106 would I look for, so 106.50 would I look for 106. But prior to that, we'll have to contest with the support level. So we'll see how it goes. So right now, neutral to bullish for dollar yen. Aussie yen here, this one is looking quite bullish here with the stock market going up. Aussie tends to go up as well. So bullish bias here, next target is 75.00. And then if it continues, if the stock market continues to go up, the yen crosses are likely to go up as well. So there's that positive correlation between, or I shouldn't say that. There is a, when the stock market goes up, Aussie goes up as well. So there's positive correlation between Aussie and the stock market. I was going to say, Japanese yen though is negatively correlated to the stock market. So yen generally drops, which means yen crosses will go up when the stock market goes up and vice versa. So right now, everything is being driven by the stock market sentiment. So our investors are optimistic at this moment, and this is why we have seen yen crosses go up, especially on Thursday after the positive numbers came out. So as long as stock market goes up, we are in risk on mode, which means we're likely to see the yen crosses and dollar crosses go up as well. So like I said, 75, then 76 and 76.50 is the target above that. And it's been holding here. So this one does look bullish. It's been holding. So if you take a look at our support level here, it hasn't managed to actually break through this support level, which means we are still looking bullish. So it can continue to go higher here. So we'll have to watch out for that. So bullish bias there. New Zealand yen, same thing. When stock market goes up, New Zealand dollar tends to go up as well with it. So this is looking bullish as well. Again, it's been holding the support level, which points to more bullishness here. So 70.65 is the first target, 71.80 is the second target. So this is bullish as well. The only thing I would comment here is stock market can change fairly rapidly if things escalate. So if we start to hear more in regards to the coronavirus deaths. So right now, what's holding up the stock market is that the number of deaths have not gone up. The number of hospitalizations have gone up, and number of virus cases have gone up. But a lot of these virus cases are more in the younger generation that's able to, or youngsters that are able to actually, they're not as impacted by it. They're able to overcome it fairly easily or reasonably easily compared to the older demographics. So this is why the stock market is not that spooked, even though we have seen hospitals are basically running out of beds in the ICU and so forth. So if something drastic happens in terms of the death rate going up for the virus, then we are likely to see stock market drop. Or if everybody starts locking down once again, that's another reason where we may see the stock market drop. But other than that, for now, we are definitely in that bullish mode here. So next target here, so bias here is bullish. Next target is 80.50 for CAD yen, so bullish bias here as well. But also keep in mind though, this is the range that it's been trading. So all of these yen crosses have been trading in a range for the last 3 or 4 weeks. So this is the last 3 weeks right here. This was the 4th week. What can happen is one of these. So it may end up staying in a range. So that's the only thing to worry about here. If it does not break through the resistance, and that goes for other yen crosses as well, if they're not able to break through the resistance, we may see them become range bound here this coming week. But for now, bias is bullish. Just be cautious though. All right, so let's move on to silver here. We'll look at commodities. Silver is still stuck in this range. So if we take this away, as we can see here, this is the range. It's been trading it for several weeks now. So this is 5-6 weeks of data here, but it's still stuck in that range. So this week we have a large pin on the top. There is some bullishness in the candle. So this candle here looks very similar to this one. So we may still see price go up from here, but we have to be cautious. So this one is, I'm neutral on this because we may get a move like this. So watch out for that. For now, this is still stuck in a range. So neutral to slightly bearish here because we may see price drop back into the support level into 1765 or potentially even into 1740-ish area. So keep an eye on it. I'm neutral on silver here. Gold is also neutral this week. We see that price went in both directions. So we have a nice doji here, completely indecision candle here. So so this is a neutral. Now, in this case, this one can go in both directions as well. So far, it's still looking bullish here. So what I would look for here would be if price holds above our support, then chances are this one's going higher as well. So in this case, the most important thing to look for here would be 1758 level. So if it holds above 1758, then we are likely to see that next move to the top there. And only if it drops through that would I look for a bit of a move to the downside here. For now, though, it's important to pay attention to 1758. Like I said, if it holds above, then we're looking for another move higher. Overall, this bullish momentum is still intact in gold. So in the long-term view here still is bullish, but in the short term, if it breaks through the support, then I would look for a drop. For now, though, neutral here, but overall bullish. Oil here. Oil has been stuck in this range here as well for the last 2-3 weeks. Hasn't really broken out of it, but we do have a bullish candle close. However, last time we had a bullish candle close as well, and then it dropped from there, so watch out. But for now, next target here is 41.60, and then 42.50. So bullish bias here for oil, but with a bit caution though. Copper here, copper is looking bullish. Last time it was bullish as well. It's into the next support resistance level. Again, we have to be mindful of the resistance level, but still looking bullish. In this case, bias is bullish. So looking for a bit of a pullback potentially, and then a further move to the upside here. And in terms of the targets, the first target is 2.73. And then above that, we have 2.76. So bullish bias here for copper. Bitcoin, I don't have the weekend numbers here. So Bitcoin does move on the weekend as well. My broker is closed, so I don't have that. But right now, as we see over the last several weeks here, this is still range bound. And we may see a bit of a decline here towards 85.50, but it's right into support. It hasn't actually managed to break through that support yet based on this chart. So in this case, it's still in the neutral territory. So as long as it's sitting in this range, it's still neutral. So we may see a bit of a decline, watch out for that. But we'll take a look at Bitcoin tomorrow in the daily market analysis once my broker is back up. So neutral bias here. S&P 500, this is looking bullish. However, a word of caution here, this is the area that it got stuck in last time as well. So if it's not able to go through this resistance, chances are we will see a move back into the range here. But it is looking bullish, and it's back again testing that level. So if it breaks through that, we are looking for another move higher in that case. So bias here is bullish here, and 32, so 31.68, which is basically the high of the week, will be the first target, and then 32.10, and then 32.35. So basically looking for it to go towards the top of this range. So this is also a range that it's been trading in. If you take a look, this is where it's been. So just looking for it to move higher within that towards the top of the range. So bullish bias here for S&P 500. Nasdaq here, this one has done really well. Stock, or I should say, our technical stocks, tech companies have done really well. Tesla is at all-time highs here. So a lot of the big tech companies have done extremely well during this pandemic because we are using technology much more now during the pandemic than we were prior to that. So Nasdaq is very bullish. Now it has gone through it's at all-time highs, so it's even higher than where it was prior to the pandemic, which is interesting, but it is what it is. So bias here is bullish. So right now, actually, I should say this. Right now, the stock market is giving us one picture, and the actual economy is so far removed from what the stock market is saying that it's just you have to shake your head sometimes. But again, the stock market operates on optimism. So if investors are optimistic that the economy will recover, the stock market will continue to go higher. And generally, we see that during the recessions, the stock market recovers before the economy recovers. But this one may be, and this is again my personal opinion only, this seems a little overbought at the moment because the economy is not as robust as the way the stock market is pointing. So I would be cautious. So especially, I would say, again, I am not an investment advisor, so do talk to investment advisors, but a lot of Robinhood traders are buying up everything in sight, and we are at all-time highs again. So I would be cautious with being super bullish on this. Of course, as a day trader, we can trade the bullishness. But if you're doing long-term buy and hold strategies, this may not be the best time to buy at the top of the market. And should things change, which may happen and is likely to happen, we may see that second drop in the market. So right now, everybody's believing that we have a V-shaped recovery, which means it dropped. This is our V-shaped recovery. So we saw the stock market drop quite a bit, and then it has recovered already. That's a little, so right now stock market is basically very disconnected with the current times, which means when there's a bubble in the market, the bubble can burst. And that's the only thing that I would say, just be cautious, not looking to buy anything at the top in terms of buy and hold strategies. But anyways, going back to the index here, this is looking bullish, so we're likely to see a further move higher here. So I would say 10,650 is potentially the level to watch out here. So bullish bias here for Nasdaq. Dow Jones here, this one not looking as bullish as the other one here, or as the Nasdaq. Nasdaq is mainly, Nasdaq has all these tech companies which are basically causing it to go higher. So this one here, bullish to neutral, I would say. This one has been stuck in a bit of a range. We are seeing that market is making lower highs. So last week or the previous week, this was our high. It has, over the last 3 weeks, been making lower highs. So we may see price come back and become range bound. So bias is neutral to bullish here, because if it doesn't go through this 26,200 level, chances are we are coming back into the range, and this may become range bound again. So neutral to bullish bias here, 26,200 and then 26,450. Those will be the next two levels to watch here. Third one, 26,785. So bullish to neutral bias here for Dow Jones. DAX here looking very bullish here, big close for the week. Next target is 12,880 level. So bullish bias here for DAX as well. But again, keep in mind, this one has not really made much progress since last week. Or I should say for the last couple of weeks here, it has gone up a bit, but it's still in that pretty much the same territory. So watch out, but bullish bias for now though. FTSE here, FTSE not looking as strong as DAX. In this case, we see that price has been stuck in a bit of a range. This is where it has been for the last 3 weeks here now. So this week's candle is neutral to bullish. We have a large pin on the top, which gives it that neutral bias. And then the candle is bullish. So does not seem to have a lot of momentum at the moment. So neutral to bullish bias here, what I would say is first target would be 62.65, and if it holds below this, we are coming down. So watch out for that, but we may see a retest of 62.65 level here. If it goes through though, of course, we have this 63.50, and then it may go further up right into the top here, but we'll have to watch the 62.65 level first. So neutral to bullish bias for FTSE. And then we have Nikkei. Nikkei actually does not look all that bright right now. In this case, we see prices made lower highs and lower lows, and it has closed with an indecision candle. So we have our spinning top here, and as such, neutral bias. I am not seeing bullishness in this. So if it holds below here, we could see a further drop in this one. So this is probably the one that is pointing down more so than up. So in this case, I would look for this 22,000 level, which is the bottom of the pin. And if it goes through, we are looking for 21,780 and potentially even lower than. But if it holds above this 22,000, like it has over the last little bit, then we are basically back into this range that it's been trading in, and then looking for the previous week's high. So neutral for the moment, but if it breaks, then we'll have to keep an eye on other indices as well, because they tend to be aligned and they tend to move together. All right, so that's all that I have for the market analysis here. There was a question: how can you access if you missed the weekly, if you missed the call from the beginning? Actually, you can go to if you're on my email list, you will get it automatically to your email. I send it out. But if you are not on my email list, you can then check it out on my YouTube channel. If you just do a search for Trading with Venus, you'll see my YouTube channel, and it'll be posted there today in a bit here. All right, so that's it. You guys have a wonderful week, and I will see you later. Bye for now.